Today, we are diving into a stock that has been taking the financial world by storm. It's trading under the ticker NYSE:NU. We're talking about NU Holdings, better known as NUBank. I'm your host, Billy Bob, and with me, as always, is our lead market analyst, Sarah. We will look at the critical issues, key metrics, and strategic developments regarding NU Holdings Ltd. or NUBank that are essential for our detailed analysis. Sarah, welcome, and let's get cracking.
Thanks, Billy Bob. Great to be here. And you're right, NUBank is a fascinating case study. For our viewers who might not know, NU Holdings is a digital-first financial platform operating primarily in Latin America. They offer checking accounts, credit cards, personal loans, insurance, and even crypto services. But the headline number here is their scale. They have over 135 million active customers. To put that in perspective, they are serving a massive chunk of the adult population in Brazil, Mexico, and Colombia.
And they aren't just a standard bank, right? They completely disrupted the traditional banking sector down there.
Exactly. Traditional banks in Brazil, like Itaú and Bradesco, were notorious for high fees, terrible customer service, and requiring you to physically visit a branch for everything. NUBank came in with a zero-fee model, a beautiful mobile app, and 24/7 customer support. They completely counterpositioned themselves against the incumbents. And because they don't have physical branches, their monthly servicing cost per active customer is below $1.
Below $1. That is wild. So looking at our methodical research framework, where does a company like this fall in terms of its business phase?
We classify NU Holdings as a Phase 2, high-growth, profitable company. In our decision tree, we look at capital returns, operating income, and revenue growth. NU is highly profitable. They are reinvesting heavily into new geographies, and their revenue is growing at a massive clip, surpassing $5 billion for the first time in Q1 2026. They are well past the pre-profitability startup phase, but they are still growing fast enough to be considered high growth.
Okay, so they are profitable and growing. But what protects them? What's their competitive moat?
Their moat is incredibly wide, and it's expanding. It's built on three main pillars. First is low-cost production. As I mentioned, their efficiency ratio is an industry-leading 17.6%. Traditional banks operate at 40% to 55%. That cost advantage allows them to offer better rates to customers and still make a profit. Second is switching costs. NUBank has deeply integrated itself into users' daily lives. They handle payroll portability, bill payments, and real-time transfers via Pix in Brazil. Once a customer uses NU for their daily life, switching to a legacy bank is a massive hassle. Third is their data network effect. With 135 million customers, they have built Latin America's most valuable financial data set. They use a proprietary AI model called NUFormer for real-time credit decisioning. The more people use the app, the smarter the AI gets at pricing risk, which lowers their delinquency rates.
That AI flywheel is a huge advantage. So how do they keep growing? You can only penetrate the Brazilian market so much. What are the growth drivers here?
We look at this through a matrix of new and existing customers. For existing customers in Brazil, the driver is product penetration. They have 115 million customers in Brazil. That's 62% of the adult population. So, the focus has shifted from just acquiring customers to monetizing them. They are cross-selling high-margin products like mortgages, insurance, and wealth management. Their goal is to push their average revenue per active customer, or ARPAC, from $16 to over $25.
And for new customers,
that's where geographic expansion comes in, and it's a massive green light on our dashboard. First, Mexico. This is their next big bet. They just reached operational breakeven in Mexico in Q1 2026 with 15 million customers. The customer base there has grown 7 times in 4 years. Second, Colombia. They have 5 million customers there and are following the exact same early-stage trajectory Mexico was on a few years ago. Third, and this is huge for the long term, the United States. In January 2026, they received conditional approval for a national banking charter in the US. They are targeting a 2027 launch, initially focusing on the 60 million US Hispanics and the massive $65 billion Mexico-US remittance corridor.
A U.S. banking charter? That's a whole new ball game. Are they bringing in the right leadership for that?
They are. They just appointed Rob Livingston as CFO, effective July 2026. He's the former CFO of Visa North America and a Capital One veteran. Bringing in a U.S. credit and finance heavyweight signals they are deadly serious about the American expansion. Plus, founder David Velez still holds about 76% of the voting power, so management is completely aligned with long-term shareholders.
Let's talk about the recent numbers. We're looking at Q1 2026. The Simply Wall Street article we reviewed highlighted some massive top-line numbers, but also a bit of a stumble on the bottom line. Walk us through it.
Right. Top line was spectacular. Revenue hit $4.97 billion, beating consensus estimates by 8%. Net income reached $871 million, which is up 41% year over year. Return on equity is sitting at a robust 29%. However, the market punished the stock recently because diluted EPS came in at $0.17, missing the $0.20 consensus. The stock dropped 36% from its January highs.
And that drop scared a lot of retail investors. But you're telling me we shouldn't panic?
Exactly. You have to look at why the EPS missed. It wasn't because operations failed or customers stopped using the app. The miss was entirely due to an increase in expected credit loss, or ECL provisions. Management intentionally set aside more money to cover potential bad loans because their credit portfolio grew by 40% year over year. As investors, we actually love this. It shows prudent risk management. They are provisioning for the future while the loan book expands rapidly. It's a temporary accounting hit to earnings, not a deterioration of the core business model.
Okay, so the business is firing on all cylinders. They are expanding globally, and that EPS miss was actually a sign of good risk management. So what is the stock telling us? Let's talk valuation. The stock is sitting around $12.12. Is it cheap?
Billy Bob, it is incredibly cheap. Because of that EPS miss and macroeconomic fears in Brazil, the multiple has compressed massively. NU currently trades at a forward PE of just 13.7 times for 2026. For a company growing earnings at nearly 48% annually, that gives it a PEG ratio, a price/earnings to growth ratio of 0.29 times. As a reminder for our viewers, a PEG ratio under 1.0 is generally considered undervalued. At 0.29, it is practically being given away relative to its growth rate.
What about the discounted cash flow, or DCF? The Simply Wall Street article had some specific numbers there.
Yes, and this is where it gets exciting. According to the DCF model, the estimated fair value of NU Holdings is $22.74. With the stock trading at $12.12, that implies the stock is trading at a roughly 47% discount to its intrinsic value.
And what are the Wall Street analysts saying? Are they seeing what we're seeing?
The analyst consensus is overwhelmingly bullish. Out of 21 analysts covering the stock, 19 have a buy rating and 2 have a neutral. There are 0 sell ratings. The average price target is $19.87, which implies about 63% upside from current levels just over the next 12 months. When you have the DCF pointing to $22.74, the analyst pointing to $19.87, and the stock trading at $12.12, the margin of safety is substantial.
That is a massive gap between the current price and the targets. But Sarah, you know I always ask, what's the catch? What are the risks our viewers need to be aware of before they hit the buy button?
There are 3 main risks. First, credit cycle risk. We just talked about the ECL provisions. If the Brazilian economy enters a severe recession, non-performing loans could rise faster than management anticipates, which would crush earnings. Second, Forex risk. About 62% of their revenue is in Brazilian reais. If the real depreciates significantly against the US dollar, it directly reduces their reported earnings when converted back to US dollars for the ADRs. Third, execution risk in the US, Mexico, and Colombia are emerging markets where NUBank's model perfectly fits the unbanked population. The US is a highly saturated, hyper-competitive market. Executing a U.S. launch in 2027 is entirely unproven for them.
Very fair points. Macro risks in Brazil and currency fluctuations are real. So let's bring it all home. Based on the Phase 2 high-growth status, the wide and expanding moat, the Q1 financials, and the massive gap between the current price, the DCF, and the analyst targets, what is the official Build Wealth Now news recommendation for NU Holdings? Buy, sell, hold, or do nothing?
Our recommendation is a definitive buy. Here is the synthesis. The market is currently overreacting to a prudent credit provisioning event and short-term macro fears in Brazil. The fundamental business model, boasting a 17.6% efficiency ratio and a 29% ROE, is intact and actually accelerating its monetization. The DCF shows a 47% upside to fair value, and the analyst consensus of $19.87 offers a clear near-term catalyst. Furthermore, management is backing up their confidence with a newly announced $1 billion share buyback program.
So a strong buy. But because of the FX and emerging market volatility, this isn't a stock for the faint of heart.
Exactly, Billy Bob. We recommend our viewers accumulate shares on weakness, keeping a long-term horizon of 3 to 5 years to allow the Mexico break-even, the Colombia expansion, and the U.S. charter launch to fully materialize in the stock price.
Brilliant analysis, Sarah. Viewers, if you found this deep dive helpful, make sure to smash that like button, subscribe to Build Wealth Now News, and let us know in the comments. Are you buying NUBank here? Or are you too worried about the Brazilian macro risks? Until next time, keep building that wealth, and we'll see you in the next video. Build Wealth Now News is dedicated to research the businesses behind the stock names. Our research are done with artificial intelligence assistance using the best practices in the industry. Please note that investing carries its own risk, and you should do your own research before committing any stock to your own portfolio. This conversation is for educational and entertainment purposes only.